Hello, everyone. This is D2 Kasui with Urban Financial Services Coalition, and we welcome you to our mortgage lending in the midst of COVID-19, featuring Kelvin Oliver, President and CEO of Core Mortgage LLC. And we're excited to continue our weekly series of getting together to connect and to learn about new things and learn about new opportunities that are going on and to build new relationships. So this is our agenda for today. We'll have a welcome, a little bit of networking. We will hear from the UFSC National Board. Then we'll have an introduction of our speaker. Then we'll have some Q&A with the speaker. Kim and I will dialogue, and then we'll open up the questions from the floor. And during our dialogue, if you have any questions, you can send your questions via chat, and then I'll either read those, or when we get to the Q&A period, you can electronically raise your hand, and then I will recognize you. And then we'll have some special announcements from Urban Financial Services Coalition. And during today's program, we want to have really good digital body language. So as much as possible, if you can have your cameras on and you can be engaged in today's conversation, that would be great. We would like for you to use your digital body language. Like, you can give a thumbs up. Everybody give me a digital thumbs up. Everybody know what that is? Give a digital thumbs up. Let us know that that your digital pieces are working. Yes, there we go. There we go. We even got some light skin thumbs ups. All right, some dark skin thumbs up. All right. People are working it. And then we also can, if Kelvin says something that really resonates with you, you can always give him a hand clap. Can we get some hand claps going? Get some hand claps. That would be nice. We like the hand claps. All right, excellent. And then if you're really feeling it, that's when you just put your face close to the camera and you nod your head up and down. That's how I know that you're really, really, really into it. And then, especially during the Q&A period, I definitely want everyone to be on mute. And then if you do have anything distracting going on in the background, you can go ahead and just, stop your video so it won't be a distraction on today's program. All right, so now it's time for a little bit of networking. We always have networking as a part of Urban Financial Services events. And what we're going to do, we're going to put you all into a breakout room, and we would like for you to share your name and company and share the best and worst advice you received in buying or selling a house. And if you had any bad experiences, working with Kelvin, this is not the time to share it. This is only good stuff. This is only good energy and vibe. I'm just joking. So you will have 4.5 minutes to do your elevator pitch. Share your name, company, share your best and worst advice you received in buying or selling a house. For those of you who are participating via phone, you will automatically be put into one of the breakout rooms. Those of you who are participating via computer, all you have to do is click on the link that is being sent to you, and you will be in the breakout room. So just click on the link. I'll meet you back here in 4.5 minutes. Just click on the link, and that will put you into the breakout room. I'll meet you back here in 4.5 minutes. Welcome back.
Oh, I was wondering what happened.
Hopefully everybody had enough time to network. If you didn't get a chance to really finish all your networking, feel free to share your information in the chat room so individuals can follow up and connect with you. So with that, we'll continue moving forward with our program. We typically have the Urban Financial Services Coalition National President bring remarks on behalf of the national organization. and unfortunately, she's unable to make it tonight. However, we have Mr. Theodis Watson, who is the Western Region Vice President with Urban Financial Services Coalition, and he will bring the opening remarks. Theodis?
Thank you, D2. As D2 mentioned, I am Theodis Watson, Western Vice President of the Urban Financial Services Coalition. I represent presidents and work with presidents west of the Mississippi, we say, from the Bay Area, Puget Sound, Omaha, Nebraska, Kansas City, where I'm located, and other chapters in our area. I am also the Assistant Vice President of Central Bank of the Midwest, where I lead our SBA and Small Business Department here in the organization. I'm glad to have you all be a part of this event. Urban Financial Services, our mission is to be the preeminent financial services organization that provides professional development programs, supports educational advancement, which what we're doing today, and promotes empowerment for its members and minority communities at large. And so as a Western Vice President, I do welcome our members and supporters to join our movement to empower and make changes in areas that we see fit, and not only bring your ideas, but also encourage solutions and also engagement with the organization. We look forward to hearing from Mr. Oliver about mortgage and how he can help us and empower us in that area. And we also encourage you all to attend next Wednesday. I'm sure D2 will bring that up with a session that talks about why diversity is needed in our venture capital space. So that's going to be very empowering. But again, we welcome you all. We appreciate your support, and we thank you for attending.
Absolutely, absolutely. Thank you, Theodis. We always appreciate you, and we appreciate the leadership that you're providing to the Western region. You know, the Western region is doing good. It'll never be as great as the Eastern region, but you're coming along. We're coming along great. Very proud, very proud
Love a challenge.
of the work that you're doing in the Western region. Well, ladies and gentlemen, it's my pleasure to introduce to all of you a young man that has over 20 years experience in the mortgage business. I really want to say it's almost 30 years experience in the mortgage business. And in his 20 years, he's been committed to educating and making the mortgage process easy for individuals, no matter, who they are. He has this keen sense of breaking things down to people in simple ways that they can understand and empower them to move forward. And with this experience, he started his own company, and he's the president and CEO of Core Mortgage LLC. And prior to starting his own company, he had several mortgage lending leadership roles, to include the National Mortgage Branch Manager. He was the branch manager for National Mortgage. He was a sales manager for Plantura Mortgage and the director of lending at Neighborhood Housing Services of Richmond Incorporated. He also worked for some financial institutions where he earned his stripes and he learned the mortgage business. He's a graduate of Hampton University. That's actually where we met, on the basketball court at Hampton University. I had to show him some of my John F. Kennedy moves, and then he proceeded to show me some real moves. And ever since then, we've been really good friends. And he's also a member of Alpha Phi Alpha Fraternity Incorporated. Ladies and gentlemen, let's welcome to the floor Mr. Kelvin Oliver. Let's give him a virtual hand clap and some virtual thumbs up.
Thank you. I appreciate that introduction, D2.
Absolutely. I'll get my $10.
Yes.
After the program.
Absolutely.
Absolutely. Well, Kelvin, thank you so much for taking time out of your busy schedule. We know that this time of the year is a very, very busy season for you, and we appreciate you taking time. Before we get into the mix of everything and start talking about the mortgage lending business, why don't we just start off by sharing about how you were doing during this pandemic? Tell us, some of the things that you have learned about yourself during the pandemic, and some things that you have been able to do during the pandemic that you normally wouldn't be able to do.
Gotcha. So for me personally, just making it through the pandemic, as best I can. I think most of us are trying to do the same thing. One of the things for me that wasn't in that bio is that I also referee basketball at all levels, going from high school all the way up to Division II college basketball. So normally for me, the summertime is pretty busy in terms of going to camps and that sort of thing. Obviously, I've been able to do none of that. So it's taught me some patience. We just have to see this through, just make sure that we stay healthy. I'm sure my wife can attest to this. One of the things that I've been able to do during the pandemic is we renovated our kitchen, which my wife is ecstatic about. And I, know we needed to do it, but had kind of been putting it off. And if you see the before and after photos of our kitchen, you'll kind of think that we went from the Flintstones to the Jetsons. So, I'm the man around my house right now as far as my wife is concerned.
I know that's right. I'm sure there was many trips to the Home Depots and Lowe's during COVID. As we also want to continue getting to know you a little bit more, Kelvin, why don't you share with us some information about somebody that has had a significant impact on you, and that person that you would share, share the type of, whether there's a mentor or a supervisor, share what kind of impact they've had on you.
Well, in thinking of that, the person that I probably would like to mention would be my late father, Willie Howard Oliver Jr. I think with him, he is a person that I grew up watching, was a role model for me. I saw him get up every day, put a necktie on, and it's something that I wanted to be. I wanted to graduate from college like he did. I wanted to get up every day, put on a necktie, go to work, go to an office, that sort of thing. And then I guess even further than that, just instilling in me what I like to call just a sense of common sense, that I like to think that I've been able to apply, both in my professional and personal life.
Absolutely. There's a power of having a father as a role model. You get to see that firsthand, and it's amazing the impact that we can have when we have strong, amazing parents. So those of you, if you have strong, amazing parents that have been role models to you, go ahead, throw your dad's name in the chat, so we know. If you have a mom that served as mom and dad, had both hats, throw their name in the chat, so that we can give them a little love today. So let's get into, let's talk a little bit about your business. Why don't you give us a little backstory about how you started Core Mortgage, and what was your inspiration for creating Core Mortgage?
Well, so I got my start in the mortgage business kind of by mistake, to be honest with you. I started off after Hampton University. I was able to get a job with, at the time, what was Nations Bank. So I started off in the finance company arm for the bank, which was Nations Credit. And that company actually started doing real estate only before the merger with Bank of America. And so that's really how I got my entrance into the mortgage business. And throughout the years, I've worked for the large national banks. I've worked for smaller community banks. I've worked with independent mortgage companies. I've worked for a nonprofit. And so all of those things and that experience led me to opening my own mortgage broker company back in January of this year. So we're now, going into our 8th month. So we're a brand new company, but our timing couldn't have been better in light of what's going on throughout the country. It's been a great time for our company and our growth thus far.
So Kelvin, I mean, I know you're a relaxed, cool guy, you know, but leaving the safety of working, for either a private mortgage company or working for a big financial institution, what was going through your mind, and why did you say, hey, I want to strike out on my own?
Well, so I've always had somewhat of an entrepreneurial spirit. And so it's something that I actually started working on a while ago. And, just going through the process of getting approved and kind of getting your ducks in a row. It's something that, I had dreams of doing, I wanted to do, but also I knew that I was prepared. All of my experiences kind of led me to this point. But speaking to your question directly, I was working at a company, and I was dealing with someone who I was reporting to. And one day, I mean, it was just, something that came to me, and I'm thinking to myself, I know more than this person. And so it made no sense to me whatsoever. And that was one of the things that I could say was definitely a catalyst in terms of, you know what you need to do. You need to open up your own company so you can basically have your own imprint and just move it forward. So it's been, honestly, from a professional standpoint, one of the best things that I've ever done.
Absolutely. So, but you didn't just quit that day and go home and tell your wife, right? You kind of planned it out.
In my head, I did, but in actuality, no, that's not the way it worked. I talked to her, told her what my plans were. She was 100% supportive of it. And then I started to just build from ground zero in terms of the business plan. I talked to several mentors that I have in the business, talked to some family members, and it was just, it was a work in progress. And then finally, that culmination, getting my license to open up my own shop, in just, January 2nd, we hit the ground running.
Absolutely. We saw you on you and your wife on New Year's, and
Yep.
from across the way, you were like, I started my own business.
Right, exciting.
Yes, absolutely, absolutely. So let's transition into talking about the mortgage business. So tell us a little bit about what the mortgage business looked like before COVID-19 and how it has evolved to where we are today.
Okay, so I would say prior to COVID, the mortgage business was good. We've had a decent, steady run. Business was good. Rates were good. So no complaints as far as that's concerned. So when COVID hit, there was a lot of uncertainty. Certainly from my side of the business, we just didn't know what to expect. What ended up happening for us, I think, is part of not having the economy go totally down the tubes was suppressing the interest rates and keeping those rates low. So invariably, what ended up happening on our side was not only were we continuing to do purchase business, for people who were buying new homes, but we received a wave of people looking to refinance their mortgages, whether it be on their primary residence, investment property, second homes. So that has been the wave that has really created the just enormous amount of volume that we're seeing on our end.
Absolutely, absolutely. So we had a little time there, especially when COVID first hit, and people were quarantined. People were asked to stay home, and some people were saying that the lending market was tight. What was your experience in that time frame?
So what my experience was is that you had some uncertainty that caused some lenders to reposition themselves. And in particular, they raised their minimum credit scores. So we had some investors who may have had a minimum credit score of 620. We saw those raised in some cases all the way to 680, in other cases to 660. One of the advantages that gave my company and others like myself is, with me being a broker, I had the ability to go out and seek different products for clients who may not have been able to meet the minimum credit score requirements that some of the banks had then put out. So it gave me an advantage that I was able to capture some additional business that may have gone to other places pre-COVID. So we did see that. Now, Also, what has happened in our business is we've noticed that turnaround times on, getting things processed, getting things through underwriting has increased. And one of the reasons for that is now you've got more loans because of the refinances, particularly with those with lower credit scores that have fewer places to go. And so that's created a log jam in terms of your turnaround time. So now loans that may have been done in 25, 30 days, you're seeing them, maybe go 45 days, even in some cases all the way to 60 days. So that's been a bit of a challenge. But with the rates being so low, I've done over the past couple of weeks, I've had clients who are actually getting rates in the twos. Now, for me being in the business, I can remember when rates went down to 6% and we thought, oh my gosh, rates are so low, they'll never get any lower. We said the same thing when they got to 4%. Then when they trickled down to 3%, we're like, wait a minute, they absolutely can't go any lower than this. And yet we're doing rates in the twos right now. And obviously those are going to be for your higher credit scores. But even, clients who have 620, 630 credit scores, we're still seeing them, in the 3% range. So rates are just phenomenal right now.
Absolutely. Now, when we see this type of, market where it's a seller's market, we see a lot of activity. Some people are saying, hey, this kind of gives us some, reminds us of 2005, 2006, 2007. What's the difference between this market and the market pre 2008?
Well, I think one of the major differences is this, with what I would call them the stopgaps that have been put in place. So a couple of things that we on the mortgage side are now bound to do is we are bound to deliver what we call qualified mortgages, or QM. So there's a certain set of guidelines that a loan must meet in order for it to be considered a qualified mortgage and then to be sold. The other thing that we're bound by on our end is called ATR, and that's we have to make sure that that person has the ability to repay. And so we're not talking about the subprime loans of old. We're talking about actually qualified mortgage applicants who we've vetted to make sure that they have the ability to repay. So I think some of the systems in place will have us to not revisit some of the issues that we ran into before with the stated income, the no-doc loans, the really low credit scores, the subprime lending, the adjustable rate mortgages, the prepayment penalties. So all of those things have gone away. So I don't think that you'll see a repeat for if no other reason that we just have more stopgaps in place at this time.
Ooh, the good old days. I remember when you could just state your income and
Right.
and state your property value, and get that home equity line of credit or get that HELOC. Woo!
Yeah. And if you recall back during that time, I remember when stated income loans first came out. And so you had an application and you had to state what your income was. I work for a trucking company and I make $8,000 a month. And so after a while, they said, well, you know what? We've created a scenario where, we know people are lying. So we don't want you to lie anymore. So now we're just going to do no doc. We don't put anything on there. And we were giving people loans for that. We were doing 100% financing on investment properties. I mean, it at one point was the wild, wild west. And it was every year we need to do more. And so we just open up the parameters so that we can do more volume. Well, at some point, the rubber had to meet the road, it stopped. And so now the measures in place, I think will prevent us from having a repeat of that.
Yeah, absolutely. Absolutely. So when you think about this current market, if I'm an investor, I'm a homeowner, or I'm a renter, where do you see the biggest opportunities and the biggest challenges?
So I think the biggest opportunity right now is for persons who have a house to sell and don't necessarily have to purchase another house. So we're talking about investors. So you've got a big opportunity as an investor, and I'm talking about those who are doing flips. The market right now, it's a seller's market. And so in Richmond, Virginia, in our local area, we're seeing contracts come in consistently now where people are well, I shouldn't say overpaying, but they're paying more than what the actual list price for properties are. That's very unusual in Richmond. In some of your bigger metropolitan areas, we've seen that in the past, but typically not in our market. So that gives an indication as to how hot the market is. Effectively, it's just supply and demand. Right now, there just aren't enough houses out there. And so you're in these bidding wars, and obviously that's driving up the prices. Now, when you're selling a property, that is absolutely great news for you. The potential problem, though, is yes, it's going to be easy for me to sell my house, but it may be a challenge for me to find the house that I want because there's going to be so much competition because of the lack of inventory out there.
Absolutely. So in terms of selling, in terms of buying a house, because it's a seller's market and you see a house that's been on the market 40, 60, 65 days, why do you think, in a seller's market, a house would stay on the market that long?
All right, one answer for you. And even in the seller's market, there's still a price point. The reason why a house is on the market that long, it's overpriced.
They're not going to be able to work nowhere for a while because I'm sure they're going to send them to rehab,
And so what I would say with that, if you think about it in these terms, you could have a house that catches on fire and it's burned halfway to the ground. But if you price that house right, somebody will buy that house. And so the reason why a house is sitting is because it's overpriced. So even in a seller's market, there's still a price point where you're not going to exceed that. So that would be, my answer to that question, whether it's a seller's market, a buyer's market. If a house isn't moving, it's overpriced.
Absolutely. And I think that some people are getting in and thinking that they can, because it's a seller market, they can put any price,
right?
Versus pricing it at the right price to be able to sell. Now, what would you say to folks, hey, Kelvin, I'm seeing that it's a seller's market. It's August. Did I miss the prime buying season? Do I wait for the next season? What do I do?
So what I would say with regards to that, I think that you have to look at your personal situation and you just have to match it to the market in terms of what you're buying in. So with that being said, I think it can be fool's gold to try and time markets because, as I told clients, no one has a crystal ball. Perfect example of that. Who knew that this COVID was coming? If we were talking this time last year and let's say, well, I'm on time, nobody knew this was coming. And so you never know what events may happen that could throw your plans off. So I think the best thing you can do is control the things that you can control, i.e. get started early, work on your credit, save some money, develop a budget, those things so that you can position yourself to be able to take advantage of whatever products, whatever rates are best going to be suited for your situation. I think you enter a danger area when you try to time a market that you really have no control over. So my best advice is to position yourself to be able to take advantage of what's out there and put yourself in the best position for whatever that market is at that time.
Absolutely. So I want to switch gears a little bit and talk about the difference between using a mortgage company and going with a regular, institution. What's the difference? What are some of the advantages and disadvantages of using a mortgage company?
So a couple things. So my company, we're a mortgage broker. So what that does is it allows us to go out and seek different mortgage products based on our clients' needs. What you have with, let's say, a bank in our area, they're considered what's called a correspondent lender. In that case, what they're doing is they're lending their own money and then they're selling it after they close on the loan. Typically, the correspondent lenders are self-contained in terms of they have their processors, their underwriting in-house, whereas a broker is more so outsourcing that. So there are advantages and disadvantages to both, but I will give you the advantage of a broker. So one of my good friends in the industry, he works for a bank. So during COVID, I've probably done about $1.5 million in terms of business that his bank was no longer able to do, whether it be because they raised their minimum credit score requirements or just certain things that they couldn't do. So he's in somewhat of a box with his company. If his company doesn't do it, he can't do it. Whereas with our company, we have some flexibility to do some things, outside of that. Now, one of the advantages that he has with his underwriter being in-house, if there is an emergency, and let's say that he needs an answer and he's got to have it right now, well, he may be able to walk up and walk down the hallway and actually talk to the underwriter. Whereas me, I'm going to have to get on the phone, send an email. So that's an advantage that he has. So that gives you an idea in terms of, where the advantages and disadvantages lie. I also think that in some cases, the broker has more flexibility with pricing. For me, I like to, think of myself as I'm kind of the player coach, the owner coach. I'm in the mix every day. I'm making loans. And so if something comes up and maybe I need some flexibility with a fee, there's no bureaucracy that I have to go through. You just make a decision and you move on. So there are pros and cons both ways.
Absolutely. Well, it's always great to know the owner.
Yep, it is.
It's always great to know the owner. Let's talk a little bit about refinance.
Okay.
So what things should people be looking at to make a decision whether or not they should refinance in this current environment?
So the first thing that I look at, a lot of times, if we're talking about just getting a lower rate so that you can lower your monthly payment, the first thing that I think persons should look at is, what is my threshold? Meaning I'm looking to save at least X amount of dollars. And that can vary from person to person. Some people will look at it and say, well, if I can save $75 a month, it's worth it to me. Other people may say, you know what, if I can't save $150, I don't want to go through the hassle of doing it. So I think the first thing that you have to identify is, what is it going to take for that refinance to be worth your while if you're just looking to lower your monthly payment. Now, if you're looking to get cash out for a reason, then in a lot of those cases, you have another motivation other than just the rate. Maybe I'm looking to get some money to send a child to school, some home improvements, debt consolidation. So that can actually be your why. But in this environment where a lot of people are just trying to lower their rate and payment, the first thing that I think you need to examine and really get a hold of is, what is my threshold? And so once you know that, now when you talk to a mortgage professional, they can run your information and let you know, all right, this is what we can do for you. We're able to save you $230. Well, if my threshold was 100, that's a no-brainer. I'm going to do that. But if I'm looking to save 200 and you're only able to save me $20 a month, well, I don't know that I want to do that, because whenever you refinance, effectively what you're doing is you're financing more money, because typically you're building in the closing costs. You're financing more money at a lower rate. So typically there's a break-even point. So in that case, if I'm saving money, but my break-even point is going to be 3 years, meaning that it's going to take me 3 years before I can recoup what I've increased my mortgage amount in closing costs, but I'm planning on moving in a year and a half, well, then it makes no sense for me to refinance that. But if my break-even point is 3 years and I plan to be in the house for another 15 years, well, that is a no-brainer. Now, the other thing that you have to look at on a refinance, now, if I've been in my house for 15 years and someone is giving me a payment, well, in most cases, I want a payment for 15 years. I don't want to take my mortgage out to 30 years just because I can get a lower payment. No, I have my mind set on paying this off in 15 years. So there are some circumstances where there may be some exceptions to that rule, but you want to look at what rate monthly payment I have now, and then also how long I have left on my current mortgage. And I think if you use that along with the threshold in terms of savings, it'll help you get to the answer in terms of whether that particular refinance is the right move for you.
Absolutely. So, this is the reason why at Urban Financial Services Coalition, we really encourage people to work with professionals, like yourself, to get good advice, because everyone's situation is not the same. And by working with a good professional, you can talk through scenarios, and especially, if you have a professional that's looking out for your best interest and not just looking, to close the next deal. So while we're talking about that, let's talk a little bit about, maybe we have some folks who, don't have A1 credit. Maybe they've had some issues in the past, or maybe they've now working part-time, because of COVID, or some reduced hours. Are there any opportunities available for them? What options should they be exploring?
So if your employment and or income has been affected by COVID, depending on how much, it can be an issue that would cause you to have to wait to pursue home ownership. So one of the key indicators or key things that an underwriter is going to look at when they look at a pay stub, so this would be for a W-2 wage earner, they're not only going to look at what you're making currently, but they're also going to look at your year-to-date totals. And so if your year-to-date totals are inconsistent with what you're currently making, it's going to cause them to ask more questions. And so that may not necessarily be a determining factor that will stop you from getting a mortgage. Just know that that question is going to come up. And so your answer may play a part in terms of what actually happened. Your industry is going to play a part in that as well. And I would say with that, during COVID, what we've seen is really your frontline service workers, at least my experience, have been the people who've been affected the most. There are several industries who have actually benefited from COVID, meaning that they're doing better. And then there are also industries that really haven't been touched as far as income is concerned. And I think that large population is who, by and large, you're seeing actually going to get these refinances because their finances haven't really been affected and they're being able to take advantage of it. And now service workers, persons who work at restaurants or what have you, those are the persons that I've seen affected the most. I personally had a client who was a bartender at a restaurant here in Richmond. Not only did he have to stop working, his restaurant actually closed their doors. And so it affected him where now he's working in an entirely different industry. And it's going to take him some time to get that job history and get back to what he was earning in his previous job that he had been at. So it'll be tough, but once again, on a case-by-case basis, it still may be something that you can overcome in the short term.
Absolutely. And what about people who, may have had some credit issues? What can they do?
So the first thing I would say with someone who has had some credit issues, the number one thing is you need to know where you are. And so what I would recommend is contacting a mortgage professional. And in our case, one of the tools that we use, we only do a soft pull. And so we're able to obtain credit scores for our clients without having a hard inquiry hit. So it doesn't affect their credit, but it at least gives them an idea of where they are. I run into this issue at least twice a week where somebody will call and they'll say, well, hey, I have an idea where my credit score is because Credit Karma told me I have a 690. And then I pull it and it's a 611. And what ends up happening is we use an entirely different scoring model than what Credit Karma or some of the consumer entities use. And so we do see some score fluctuation with regards to that. So you want to get your credit pulled by a mortgage institution so you can get an idea of what your mortgage score is. I would recommend, if you're talking to someone, ask them if they have the ability to just do a soft pull, just so you can see where you are. From there, they should be able to help you to formulate a game plan in terms of how I can go from maybe being someone who's not quite mortgage ready to how I can get mortgage ready. And for conventional loans in particular, the higher you can get your credit score, the better your terms are in terms of the interest rate, maybe products that may be available to you. And obviously that interest rate is going to correlate into a monthly payment. So number one is just knowing where you are. Number two, you can formulate a game plan with the mortgage professional. And then number three is just executing the plan.
Absolutely, absolutely. So we're close to the end of our prepared questions. If you have any questions, please put your question in the chat or raise your hand. There's quite a few of you on the call. I have to kind of check to see you all, but just let us know. I'm gonna ask this question, and if you have a question, you can put it in the chat. So Kelvin, what do you think are some of the common misconceptions that people have in terms of either buying a house or selling a house? or financing the purchase of their home?
So some of the misconceptions I would say when you're selling a house would be, you've been in a house, so you're emotionally invested into that house. And so there are some things that have meaning to you that may not give your house any value. So for instance, you have some drapes that have been in your family for 60 years. And so they have a lot of sentimental value to you. And you're thinking, well, surely because my house has these wonderful drapes, I certainly should be able to sell for more than anybody else in my neighborhood. Well, that's just an example that those drapes really don't give your property any added value. And I'm using that as an extreme example, but people are attached to their houses, and sometimes rightfully so. But there are certain things that give your property value, and there are certain things that don't. And I think that emotional attachment can be one of the misconceptions in terms of what actually adds value to your property. From a financial standpoint, I think one of the things, or one of the biggest misconceptions that I see, is putting more money down as far as my down payment is going to significantly reduce my monthly payment. And I think a lot of people are surprised to hear that roughly for every $1,000 that you put into the transaction, you'll save about $6 a month in payment. It just seems like it should be much more than that. If I, scrape up an additional 5,000, surely that's going to save me $500 a month. And that's just not the case. So those would be a couple of misconceptions that I would point out.
Okay, absolutely. One question that we got from the chat is, do you do any more commercial lending?
We do some commercial lending, but I actually have a banking partner that I refer deals to, and it just depends on the particular deal. We do some commercial lending. I do think that my banking partner, in some cases, they have the tools to do a better job there. So she and I will refer deals back because there's quite a few things that she feels like we do a little bit better. So from a commercial standpoint, we have some ability, but if not, then I can certainly point the person in the right direction.
Absolutely. We got another question in the chat. Can you tell us a little bit more about your service territory that you do loans in? Do you do loans for?
Sure. So from a mortgage broker standpoint, everything is state specific. So right now we're licensed in the state of Virginia. We're in the process of getting licensed in Maryland, then North Carolina, and then DC. So we're going to be concentrating in the DMV area, Central Virginia, and then going down to North Carolina.
Okay. All right. You're going to go regional, and then next thing you know, maybe you may be national, then maybe international, maybe interplanetary.
Right. Watch out in New York and California. I'm trying to make it there at some point, and Kansas.
I know
and Missouri.
Absolutely. Another question we have in the chat is, do you have access to affordable products and grant funds?
Yes, we do. So we have a program on our end that's an internal grant that we pair with FHA loans. So FHA has a 3.5% down payment requirement. And so this grant will actually cover the 3.5%. So there is some criteria with our particular program. We need at least a 620 credit score, and we're looking for an approval through the automated underwriting system. Now, having said that, that's something that we have internally, but we'll also pair our loans with some external grant programs. So here locally, we have some agencies that provide down payment assistance.
Absolutely. And while we're on that, can you share the difference between conventional and FHA loan products?
Yeah, so I'll point out some of the highlights and the differences. So typically, when we have a client with lower credit scores, we're going to think FHA. So in our case, we'll do an FHA loan down to a 580 credit score. Also with FHA, it gives you the flexibility that even if you don't get an approval through the automated system, then we can do what's called a manual underwrite. And what that means is we provide some additional documentation, but you can still get a loan approved. On the conventional side for us, everything has to be approved through the automated underwriting system. And so there are just some cases where you simply can't get an approval. Now, with that being said, conventional loans are much more forgiving when it comes to student loans. So that's a problem that we run into quite frequently. FHA has a rule in place that says whatever the balance is of your student loan, we've got to count 1% of that balance as your monthly payment. And that has to be included in your debt to income ratio. So if you're someone who is heavy on student loan debt, it could impact your affordability. And that's where conventional loans give you some more flexibility, because FHA says whether the loan is in forbearance, whether it's deferred, whether you're on an income-based plan, it doesn't matter. They're going to charge you 1%. On conventional, let's say if you're in an income-based repayment plan, we can actually use that reduced payment in your debt to income ratio. So you would be able to qualify for more going conventional. So those are just a few of the differences or distinctions between the two loan programs.
Absolutely. So we have a question here about, do you do any work with mixed use property?
So when we think of mixed use properties, we actually would put that under the commercial umbrella. And so the same would apply. We'll look at it on a case-by-case basis. And if it's something that we feel as though we can provide, a good product and a good service, we'll do. If not, then we'll certainly refer it out to one of our bank partners in the commercial space.
Absolutely, absolutely, excellent. We have another question in the chat, which is, what are you seeing in terms of underwriting or financing multifamily and investment properties since COVID?
So one of the things, things have tightened up a little bit as far as investment properties are concerned, but it's more so the market, meaning that when there was a ton of uncertainty out there, investors just didn't want to buy those loans. And so you saw some of the guidelines become a little more restrictive because it just wasn't a big appetite for those loans. Now I have seen things loosen up some, but for instance, pre-COVID, you could go up to 80% loan to value on investment properties. So that basically is saying we're going to loan you 80% of what it's worth. There have been some restrictions that have limited that to 75%. And so, that 5%, whether it be on the purchase or refinance, could make a big difference in some cases. But that would be an example of how I've seen things tighten up a little bit as far as investment properties are concerned.
Absolutely, great. When you look into your crystal ball,
okay,
what do you think is the outlook for the mortgage lending business between now and the election and after the election?
So my crystal ball says that it's a great time if you're able to take advantage of refinancing, to take advantage of purchasing a property. I don't think that you're going to see much of a rate fluctuation between now and, say, the inauguration. I just don't think that in the climate with the pandemic, with the election season, I just don't think that you're going to see much movement on the rates, which is great because right now they're phenomenally low. Now, going into next year, I think that 2021 is also going to be an excellent year for my business. Now, beyond that, I think is where it gets a little murky. But I would say, at least in my crystal ball, for the next 12 months, it's still going to be, where we're going to see, good growth, good business, good rates. Now, the one caveat to that, though, is that we're going to start getting back to more of a sense of normalcy. Now, if there is another huge outbreak with COVID, who knows, all bets may be off at that point, but I'm remaining optimistic that that won't occur.
Gotcha. Well, could we talk ethnically for a second? We have one question in here about your experience in the mortgage business. Before you were in the mortgage business, they passed several pieces of legislation eliminating redlining and other discriminatory acts in housing. Have you seen any remnants of discrimination in the mortgage lending business? What has gotten better, stayed the same, or gotten worse?
So I won't say that it's been necessarily redlining, but there are still some remnants today. And I'll give you this. So you'll find that there are a bunch of mortgage companies that have minimum loan requirements, okay? In addition to that, you'll see where in particular on conventional loans, where there's actually a pricing adjustment, meaning that they're charging a higher price for loans under a certain loan amount, okay? So as we all know, what that does is it's disproportionately affecting poorer people, okay?
Mm-hmm.
And we know that disproportionately, you're going to see more ethnic minorities in those groups. And so, you know, from my vantage point, it's something that's baked into the cake. And so in the mortgage business, everything is predicated on loan amount. That's what you're getting paid on. So you're seeing companies that are going after the larger loan amounts because it's more lucrative for them. And think about it. The same energy and manpower that it cost me to process a $40,000 loan is the same manpower it's going to take to process a $400,000 loan. But the money that you make is drastically different. And so from a capitalistic standpoint, you understand why they're looking at those things. But to me, it's inherently unfair. And you're effectively, I mean, I'm going to call it a tax. It's basically a tax for being poor.
Mm-hmm.
On why would you charge me a higher amount or a higher rate or more fees per, as it relates to that loan, percentage of the loan, because I'm under a certain loan amount. And so that's just an example of what I see as being some practices today that still continue. You know, you may not be able to call it outright racism, but I think we all know what it is.
Absolutely, absolutely. We got another question in the chat that says, have you considered how being a member of Urban Financial Services Coalition can help your network connections and reach for your company?
You know, while I have been thought about UFSC specifically, I have given that thought just in terms of trying to be strategic about the growth of my company. But I will say this, you know, persons such as yourself, just those connections and, you know, me going back with the organization when it was Richmond Urban Bankers Association has actually helped me throughout my career. I mean, from when I was just getting out of college. As a matter of fact, I'm not sure if you remember this, D2, but I actually reconnected with you at a RUBA meeting.
That's
back
right.
in the day. So yeah, so UFSC has played a big part in, you know, where I've been able to get today, just with the people that I've met, you know, just with professional development, the whole nine has been very instrumental in my growth. So definitely has, you know, much appreciated.
Absolutely. Don't worry. We'll send you the invoice.
Absolutely.
For the new membership.
I got you covered.
So while we're in that space, what do you think professional associations like Urban Financial Services Coalition can do to, you know, help, you know, minorities, you know, get over some of the challenges in the mortgage lending business?
Well, I think just, you know, having discussions like this, anything where you're able to network and to be around to see people who may look like you, to get a chance to experience maybe some people who are in different fields, to see how there might be some synergy there. Just being able to expose, particularly young people getting into financial services, as to the myriad of opportunities that are out there, I think is very important. And, you know, obviously, as you grow in the business, you kind of grow together and you can take advantage and leverage those relationships. So I think organizations such as UFSC are extremely important. And I would just say to continue doing the work that you've been doing.
Absolutely. You know, we're gonna do that. And so while we're talking about young people, if you could go back through time and give a young, you know, no gray hair, full head of hair, Kelvin Oliver, some career advice, what would it be?
You know, I think the thing that I would tell myself is to be fearless. I think that I'll just say for myself that I think at some points I was so, you know, just not wanting to ruffle any feathers, to not, you know, just do anything that may cause unwanted attention or what have you. Even when you thought it, or even when you knew it was right, I think sometimes just having that courage to just speak up, or to maybe not be afraid to introduce your idea. as opposed to just always, let me not ruffle any feathers. I'm gonna be status quo and that sort of thing. I think, not to the level that some people want, but maybe being a disruptor in a good way, in terms of maybe introducing some ideas, maybe bringing up something that would be beneficial to our community, that maybe some other people may not have thought about. So that's one of the things that I think about is just being fearless, and then also being fearless from the standpoint of certainly. Corporations have a lot to offer. You get in, you make connections, you learn, you get experience. But at some point, if it's your desire, make the leap and don't be afraid. Definitely just do it. Know that there are going to be some difficult days. But if that's what your heart desires, to not be afraid to make the leap in terms of, doing it yourself, or, partnering with someone else where you have a little more control over your destiny.
Yeah, and that's really good advice, Kelvin. One of the things when they look at studies for the wealth and income gap between African Americans and non-minorities is a lot of times we don't have that level of assertiveness or aggressiveness. They'll see an opportunity, and if there is just one little reason why they can make the suggestion or take advantage of an opportunity, they'll go ahead and do it. Us, if we see one thing that we can't do,
right.
We'll say, oh, well, no, I can't do it, or I won't make the suggestion. So, being able to be fearless and to, really know that that we have the talent, we have the ability, and to go for it, and we don't have to connect all the dots in order to move forward, is really great advice. The one quick question is, why do you think we have a shortage of African American loan officers today in the mortgage industry?
Wow, that is a great question. I actually met with a realtor yesterday, and we were discussing this very issue. I think one of the reasons why we have a shortage of loan officers, why we have a shortage of minority title companies, is because real estate, at least in our area, and I dare say probably in a lot of areas, is very segregated. And with that, there's a lot of legacy in real estate related businesses, meaning that, well, my father was an agent, my grandfather had a mortgage company, whatever the case may be. And I don't think that we necessarily have that same legacy. And this is a type of business where, I didn't go to college to be a loan originator. It's something that I sort of happened into. And so I think now it's incumbent upon people such as myself that I've got to share my profession with younger folks coming in, and just other folks in general, and letting them know what it is that I do. I don't rap, I don't play ball, I don't sing, but I love what I do, and I think it can be a good living for a lot of folks. But how would they ever know if they're never introduced to it? And so once again, I just think it's incumbent upon myself and other minorities to kind of reach back and show, hey, you have a skill set, you can sell, you got a commodity, this may be something that you might be interested in. But until we're doing that at a consistent level, you're not going to see a lot of people get into the business. And we've got to break down some barriers as well, because one of the prime referral sources are realtors. But more times than not, when it's a Black-owned company, the majority of your business is going to come from Black agents, right?
Mm-hmm.
It's just the way that it is. It's a tough nut to crack to get non-African American realtors to send business to African Americans. It's definitely not impossible, and certainly, I'm trying to do my part, but it definitely is a challenge. And so those are some of the things that why you don't see it, but that doesn't mean that we can't change course. And so I'm definitely trying to do my part.
Absolutely, absolutely. And it's the work that we have to do in our industry. The financial services industry is a very lucrative industry. And so even in 2020, we still have to knock down some doors increase awareness, have people see role models like yourself, know that, hey, there's African American that owns his own mortgage company. You know, he blazed a path. It's a path that you can also take too. Two questions we'd like to end out with is, the first question is, how would you, when we think about legacy, how would you like to be remembered as a professional and as a person in your community and in the faith space?
So I would say, as a professional, and actually in my personal life too, I would like to be remembered as somebody who tried to do his best and was always going to try to do the right thing and be on the right side of history. You know, sometimes doing the right thing, I mean, it can be difficult and it can be challenging, but I always try to remind myself, down the road, you want to be remembered for being somebody who was on the right side of history. And you know, I have to hearken MLK with that. And I don't know how anyone else on the call feels about this, but I feel like if he were alive today, I think that there are a lot of people who would have not so nice things to say about him. Mm-hmm. And a lot of the same people that now try to invoke, you know, some of his words from before, they wouldn't feel that way if he was still alive today. That's my true feelings. And so when you go back to his time, I feel like over time, he has been a person that is now seen on the right side of history. Whereas back then, you know, we had similar people to what we're dealing with now who are saying certain things. And I don't think that they're going to be viewed on the right side of history, but that's something where I try to use that to control my thoughts and things that I say and do. So I just want to be remembered for being somebody who tried to do what was right and to be remembered on the right side of history.
Absolutely. Absolutely. I can tell you, brother, you're on the right path. Yeah. And then as we close tonight's discussion, what are two to three insights that you would like for people to take away from today's discussion?
Well, I think one of the things, if you haven't looked at it and you have a mortgage or you're interested in becoming a homeowner, I think, you know, just do it. You know, start the process, start preparing or what have you. But, you know, I would say get started. So that's number one. The second thing is what we talked about in terms of not just the mortgage industry, but I think it's very important that you mentioned we don't have enough minorities in financial services, in my opinion. And I think, once again, it is super incumbent upon us to introduce and expose as many people, particularly young folks, to it as possible. And I will say this, and this isn't to toot my company's horn or what have you, but we've got an employee, actually our newest employee, who is a former NFL football player. And so he basically is, you know, he's trying to go professional again, but just in the mortgage space. And so you'd be surprised at, you know, who is open to the idea of getting into the space. You just have to welcome and give them information and give them education about it. So I would just say, if he's willing to take that leap, then what's to stop anybody else? So I just think that that's going to be vitally important, just to make sure that we can keep the momentum going.
Absolutely. A lot of opportunities, and people just have to be willing to take advantage. Well, everybody, let's thank Kelvin for an excellent presentation. I appreciate your candor. I appreciate you sharing your insights and your thoughts. Let's give him some virtual hand claps and some thumbs up. And we appreciate Kelvin for doing such an awesome job. If you would like to learn more about his company, you can visit his website at coremortgage.com, or you can give him a call. One of the things that I have used Kelvin for is that he gives really good advice. He's a good advisor, and he will just tell you the truth. If you want to know the truth, you know, give Kelvin. If you don't want to know the truth, don't call Kelvin. Kelvin is going to tell you the truth. And one of the things that we're committed to here at Urban Financial Services Coalition is that we want to encourage you to work with professionals. And we really would like for you to work with professionals that look like us. You know, George Fraser said that we shouldn't ask other people to do things that we aren't willing to do ourselves. So in this time of racial sensitivity, and individuals thinking about, hey, they want to do more in the Black community or work with Black professionals, let us be intentional about working with other Black professionals ourselves, and then also encourage our non-African American friends to do business with our Black professionals, and we know that they would do an excellent and good job. If you haven't done the census, we'll encourage you to participate in the census. This is really how funds are allocated, from the federal government. So please encourage people in your network to participate in the census. And please get out and vote. Not only vote federally, but also vote down ballot. When we think about things that are happening to people of color, where the DAs are not making indictments or making poor decisions, or chiefs of police doing, not holding people accountable. This is how we deal with them. So not only vote on the federal level, but make sure you vote down ballot, vote locally, because that's where a lot of the action is. And this is one of the most important elections. UFSC is a nonpartisan organization, but we do encourage you to be informed and make the best decisions about voting. Next week, we continue the conversation, and we're going to have Jonathan Mayo, who's the founder and CEO of Team Excel, and the president and CEO of Avail Marketing. He's going to be talking about the venture capital space, about his experience about getting funding for his projects, and how we can get more African Americans in the venture capital space. So you can, it's going to be the same time, August the 19th. You can either go to ufscnet.org or go to UFSC COVID-19 Venture Capital.eventbrite to register for the event. And then the following week, on August the 26th, we're going to have Dr. Pamela Smith Downing. She's going to be talking about breaking free from debt during and beyond COVID-19. She just recently released her book, Read My Lips, No More Debt, Tools for Ending the Debt Cycle. So those are two powerful sessions that we have ending out for the month of August. And if you're not a member of Urban Financial Services Coalition, we encourage you to consider becoming a member. We have a local, in the local market, we have the Richmond chapter of Urban Financial Services Coalition. There's always space for you to become a member, or if you're in San Francisco, Kansas City, we have chapters there. If you don't have a local chapter, we also have national membership. And so you can go to ufscnet.org. We can definitely use you on deck. We want you to be a part of our professional family. And I always like to end our sessions with my favorite saying, which is be a river and not a reservoir. What does a reservoir do? A reservoir keeps all the information to itself, and everything inside a reservoir dies, churns distorted colors. There's no growth inside a reservoir. But what does a river do? A river takes all of its nutrients downstream, and everywhere it touches churns green. So relationships get better. Money gets more enhanced. People are happier. People are excited. And so we want to take the information that was shared tonight, share it with people in your network. We've started a Urban Financial Services Coalition YouTube channel. So for those individuals who may have missed today's program, you can just refer them back to the channel. So with that, I would encourage all of you to cut your cameras back on and say good night, and unmute yourself and say good night as we close out today's session. Daryl, thank you so much.
Good night.
Great seminar.
Good night,
Thanks a lot,
everybody.
everybody. Have a good
Thank you,
night.
Kevin.
Stay safe.
Thank you.
Thanks,
for having
Kelvin.
me.
Night.
Thank you.
Absolutely.
This is great. Great information.
Yes, thank you so much. Thank you, Darren. Appreciate you.
Absolutely.
Viva Milton, thank you so much. And is that Linnell Bevels?
That is. How are you?
Doing fantastic. So glad you could make it tonight.
Yeah. It's been a long time since I've been on an Urban Financial Bankers call, and this was really, really good information. I don't know why I thought Kelvin was from the Bay, but I don't know why I thought that. But anyway, it was a nice conversation. Yeah, Kelvin, I thought you were from the Bay.
But well, I'm gonna tell you, I love the Bay. That's one of my favorite places to visit.
Okay.
So.
Okay. Well, call me when you're here.
All right, will
And
do,
we're
will
here in
do.
the Bay. Yeah. Okay. And congratulations on your new gig. I've been in mortgage over 30 years, so your story is really, your
Okay.
story is really like, wow, that's great that you took that
appreciate
leap, right, to get your
Yep.
broker's license. Yeah. So
Absolutely.
I'm not there yet.
We'll talk. You and I will
Yeah.
talk.
No, I wrote your name down. We're gonna
Okay.
talk.
Okay, sounds good.
All
Have a
right.
good night.
Good night. Hi, Daryl.
Bye now. Take care. Have a
Bye.
great one.
Take care. You all do the same. Reba, I see you. Reba Middleton. I see. Well, I see Reba Middleton, but I don't see her.
Yeah, I love that Black Lives Matter.
No, it's fantastic. Hello, Reba. Okay. I guess she's.
So I'm
Oh, there
watching
she
the
goes.
Giants game while I'm watching y'all.
Oh, hey, Reba. Good to hear you. Okay. Take care. Great job, D2.
Absolutely. Thank you so much. Have a great
You're welcome. You do the same. Take care. Bye.
Thank you.